Today is Monday, November 18th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Mark Bowman, ADMIS Senior Global Market Analyst. Starting with the grains this morning, Mark, with tension in the Black Sea region heating up over the weekend, how will this impact the wheat market?
Yeah, Kurt, over the weekend, Russia, they launched over 200 missile and drone attacks, which reportedly did some significant damage to Ukraine's electrical grid. And now, in response, the Biden administration is allowing Ukraine to use U.S.-made missiles to launch attacks deep into Russia. So tensions are sure to stay elevated here for the time being. So far, it really hasn't impacted Russian wheat prices. They still continue to offer wheat at about $226 a metric ton, but prices here have rebounded to start the week. Wheat exports from Russia and Ukraine have been very strong, despite this year's harvest being well below that of a year ago. So we would expect a pretty significant slowdown in coming months as global demand shifts to some of the southern hemisphere suppliers, namely Argentina and Australia, maybe even the U.S. So prices have almost fallen back to contract lows recently, which were also four-year lows. So to me, there's just very little war premium left in the marketplace. We may not rally a whole lot here as conditions of the U.S. crop have begun to improve, as we've seen a lot of moisture in the U.S. southern plains. But I do think we're overdue for some bit of a short covering bounce into year end. So I'm holding a target of in the $5.75 to $6 range for spot Chicago.
Mark, what can you tell us about the latest developments with used cooking oil imports from China and the impact it may or may not have on bean oil prices?
Yeah, on Friday, China announced that they would end export tax rebates, which amounted to 13%, starting December 1st on their used cooking oil exports. That did trigger about a penny per pound rally here in U.S. bean oil prices. Overnight, however, we saw Malaysian palm oil prices drop over 3.5% on ideas that Chinese demand for palm oil would slow significantly as a result. So if nothing else, I think we're going to continue to see just a narrowing of the gap, the price spread between palm oil prices and bean oil prices. They've recently accelerated out to the widest level in about 15 months. As a result of that big spread, U.S. bean oil demand has really begun to accelerate, namely in exports, but it's running strong for renewable diesel production as well. So I definitely expect the USDA to raise their export forecast on exports here in the upcoming December WASDE report. I think the crush number is too low, and bean oil usage for biofuel production is also too low. But we do have a blender's credit of $1 a gallon that expires at the end of the year, at the end of this year. And with the Trump administration coming in here in January, a lot of uncertainty regarding that. So short term, I have a neutral to friendly bias here on bean oil prices. I think we're going to see a rebound back up into the 47 to 48 cent level area here before year end.
And lastly, Mark, it's springtime in Brazil. Can you give us an update on the South American weather?
Yeah, weather down there has been rather favorable here. We've seen some dryness in central Argentina and southern parts of Brazil here recently, but that has only enabled farmers to get a good jump on getting their crops in the ground. Central areas and northern growing areas of Brazil, they remain well watered with their crops pretty much planted now. This morning, AgRuel, they've reported that bean plantings in Brazil have hit 80%, well above last year, well above their historical averages. Argentina plantings, as of late last week, they hit 20%, which is historically pretty high as well. And I look for a big advancement this week when they report again on Thursday of this week. So I think in general, weather is favorable and it keeps production prospects high. But as we all know, it's a long growing season.
We'll continue to keep an eye on that. Mark Bowman, the cocoa market broke out last week. What's going on?
So March is the lead contract. It traded to its highest level since April 25th, which was the day after the market peaked at 89.84 for that contract. The nearby contract, though, remember, was up at $12,000 on April 19th. So there's quite a bit of difference between the high and in the March contract and the overall historic high. Last week, there was a report that the Ivory Coast cocoa regulator, the Coffee and Cocoa Council, had reduced its cocoa export contracts for 24-25 by 40%. And this sparked concerns that the crop was not nearly as strong as previously believed. It's also maybe that the CCC is being overly cautious, abundantly cautious anyway, because they were caught short-bought last year when the crops were so bad. Ivory Coast did have some heavier than normal rains in October, sometimes described as excessive or relentless. And there has been anecdotal report of damage, mold, such as that. In the meantime, though, the arrivals continue at a strong clip. Ivory Coast arrivals this week, 94,000 tons. That's up from 90,000 last week. And this is the highest week since January 2023. So it's over almost 2 years. And cumulative arrivals for the marketing year, which began on October 1st, have reached 549,000 tons, which is up from 417,000 at this point last year. So the question is last week's rally far enough? We will have to wait and see, I guess, to see whether the weather was bad enough in October to severely damage the crop, and when will arrivals drop, and how soon will they start to? There's still some uncertainty about that. The market itself has to recover from 3 straight global supply deficits, and last year being the worst. So even if we have a strong crop this year, it's not necessarily going to make up all the difference that has occurred over the last 3 years. There's also been, we get mixed reports on the crop conditions, with sometimes too dry concerns in Ghana and even Ivory Coast mixed with Ghana. But overall, the farmers have been mostly positive on crop conditions.
Mark, coffee also made a new contract high. What's happening in that market?
Well, the main issue lately has been the conditions for the 2025 crop in Brazil. Yes, as Mark mentioned, we've seen really decent rain. That's hit Minas Gerais well over the last few weeks. But and they were late, but they've been good since they were late. So they've got a decent flowering. But that long drought last year has traders wondering whether the trees have enough energy to produce a strong crop this year. And last week, a cash broker commented that he sees lots of leaves on the trees, but not enough cherries in the area he monitors. And the Arabica coffee plant goes through kind of a biennial cycle where 1 year it grows branches, and then the next year is able to put cherries on that new growth. So there's a little concern that it may not be good enough this year. The other issue, though, is also Vietnam's harvest, which is going on now. It's believed to be in much better shape than last year, but they've had a succession of typhoons that have moved across Southeast Asia over the last month or so, and that has brought some rains to Vietnam that slowed the harvest, but not necessarily caused much damage. Indonesia also getting rains after the dry conditions there. So for March New York coffee, well, for the New York coffee in general, the next resistance, we have to go to the nearby chart, which was the September 2011 high of 291.75, and then the peak, which was in May of that year at 306.25, and that was the highest level it had been since 1997.
Mark mentioned the escalation of the war in Ukraine. Can we talk a little bit about crude oil and what impact the Ukraine war is having in that market?
Well, yes. Seems to be putting a bit on the market today. Support that the crude oil market has gotten this year seems to be mostly on anxiety over supply because of what's been primarily because of conflict in the Middle East till this point. The Russia-Ukraine situation kind of put on the back burner, but this kind of brings this issue to the fore. On the other hand, the market has been in a generally downward pattern because of low demand in China, particularly. Russia is a member of OPEC Plus. They've been observing lower quotas this year. OPEC Plus has been talking about lifting its quotas, but he's postponed that twice due to this fall due to low prices. IEA said last week that global oil supply, they expected to exceed demand by more than 1 million barrels per day in 2025. So, the market, China's last week, refiners processed the equivalent of 14.02 million barrels per day in October, down from 14.3 million in September and 15.05 million a year ago. And that was the seventh straight month of year-over-year declines. So, yes, this provides a psychological boost, but we've seen no reported drop in supply from the Mideast situation or from the Russian situation this year.
I will continue to watch it. Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.